everyone, and welcome back to the MidDay Bell. Today, we're covering one of the strongest multi-quarter execution stories in the gold sector, Equinox Gold, which trades on the TSX and the NYSE under the symbol EQX. Over the past 90 days, the company has delivered a series of major milestones. First ore processed at Valentine in August, first gold in mid-September, record consolidated production of over 236,000 ounces in Q3, and most recently commercial production at the 100% owned Valentine gold mine in Newfoundland and Labrador. On top of that, the Greenstone mine in Ontario continues to improve quarter after quarter, with new leadership additions and rising grades heading into 2026. With both cornerstone Canadian assets ramping, Equinox is entering a new year with growing production, stronger cash flow, portfolio optimization underway, and some of the most meaningful catalysts the company has had in years. Thank you, Brian, for joining me today.
Nice to be here, Rebecca. Thanks for having us.
So, Ryan, let's start right from the top. Equinox has achieved first ore, first gold, record Q3 production, commercial production at Valentine, all in just the past few months. A pretty amazing run for the last since August. How would you characterize this period for the company, and what does it signal as we wrap up 2025?
Well, yeah, no, you just highlighted a couple of the major key points that we've had in Q3, and it was an exciting time. We've talked about this a little bit in the past, that by bringing Calibre Mining together with Equinox Gold, we have a significant increase in North American gold production, and that's now becoming more and more evident as we increase and ramp up and optimize operations at the Greenstone gold mine in Northern Ontario, Canada. But as you just mentioned, at the Valentine gold mine, which was just slightly behind Greenstone's trajectory in terms of its ramp up, we did see first gold ahead of schedule in September, and things are tracking very, very well from a ramp up and operational perspective at Valentine. Typically, these things on ramp ups can take quite a few quarters, but interestingly enough, first gold in September, and in November we've already announced commercial production, which isn't quite at the full nameplate capacity, but it's giving us a reassurance that we will be able to hit nameplate capacity through the mill and moving material at Valentine, probably by the end of Q1, Q2 of 2026. So what does this mean? It just means really that majority of our net asset value is now focused around North America. And excitingly, we are seeing record amounts of production, which means record amounts of revenue at these current gold prices. And it seems as though gold is holding above $4,000 an ounce. So I think we're setting ourselves up very well for a solid Q4 and transition into that full nameplate capacity into those Canadian assets in 2026.
And it's clear that the market is really noticing all the success the company is having as well. I mean, the last time we spoke was in August, and the stock was trading around $7 a share, and now it's about 18. I think we're crossing into 18 today. Is all that just coming from, do you feel like you're reaching new investors? Current investors are really doubling down. I mean, how excited are you about the increase in share prices the company's experienced?
Yeah, I mean, it's nice to see the reflection of that based on all the company's hard work and continuous focus on delivering into expectations, and I think that's a big piece of it. For Q2, for example, we met expectations. Q3, we met analyst and investor expectations. So we're really focused on knowing how what's happening on a regular basis within the business and transparently communicating that to the market, so that we don't disappoint with regards to overestimating how much production we're going to do, or on the cost side, just making sure that we're very clear about how things are going, because during ramp up periods, there's stumbling blocks, there's hurdles, there's things can really impact operations. So from that perspective, it's nice to see that. And I believe Equinox presented a compelling opportunity. I mean, if we look back to August, right? In July, I think that the company had probably done about a 15% share price movement since the beginning of the year, versus the peers in our sector that were probably closer to 50%. And, obviously that coincides with an increase in gold price. But interestingly enough, on the second half of the year so far, we've outstripped our peers in terms of share price performance. The gold price is up about 18% versus the beginning of the year, gold price was up about 30%. And we're actually up, as we just talked about, we're actually up about 110% since that point in time. And so, yeah, obviously nice to see. And I think that's getting that transparent communication, some building up some confidence in the market that we can meet or beat expectations. But obviously, a big part of that is that ramp up optimization at Greenstone and this continuous delivery at Valentine that is giving people levels of excitement. I'll also say that, if we look back to 2022 at Equinox Gold, and you put it against a basket. I mean, I've got a basket of about 20 that I compare ourselves to of gold producers. The company at the beginning of the year or at the middle of the year of this year was only up about 2% versus the peer group that had been up as much as 200 to 250%. So it really did present a very compelling opportunity. And I think it's this inflection point we're going through now with regards to now these Canadian operations are delivering into some expectations. They're starting to generate cash rather than just investing in construction. So you've got two assets that the company has been investing in construction for a number of years. And you can never really tell how things will go upon delivery from construction to operations. But fortunately, things have gone really well. And I would accredit that a lot to Darren Hall, the CEO of Calibre, because he brings a tremendous amount of operating experience to this company. So it's nice to see things starting to come together and dovetailing with the gold price.
And speaking of the company just exceeding expectations, the August 28th update showed that Valentine was processing ore ahead of schedule. And by mid-September, you had your first gold. So what enabled that rapid and efficient transition through this commissioning phase?
Yeah, good question. And I come back to the experience and expertise that Darren has as a leader, not only as the chief executive of the company, but really understanding operations and construction. So let's walk back through the history of Valentine just a little bit. Calibre Mining that merged with Equinox acquired that asset in January of 2024. And what Darren did at that time was he augmented the construction team and brought in some of the leadership, the operational leadership team at that time as well, in order to make sure that the operating team, the senior people, a gentleman by the name of Jason Sear, who's VP of Operations, and he himself has a tremendous amount of experience. But what that enabled was Jason, as an operator of the mine, working with the construction folks to ensure that he got what he needed so that he could ramp up effectively and efficiently. So by bringing in that senior leadership team early, in fact, it was probably a year and a half early, we're seeing the benefits of that now because of the crossover of the construction team with the operating team. So, and again, that comes from Darren's experience of doing this a number of times. I think it was at Newmont for over 30 years. And he was able to learn from all of those experiences that he had through construction, through operations, and particularly what I think Darren's really, really good at is optimization. And that's what we're seeing at some of the Greenstone asset as well.
What an incredible accomplishment to actually be that early. And it does, just add that, like, it kind of pronounces the value in investing in people and how important that is in this type of industry. Things never happen early, traditionally in this space. So that is just an absolutely incredible accomplishment. So now that Valentine has achieved commercial production with throughput, availability, and the recoveries ahead of expectations, what are the next major milestones investors should be watching as you progress towards nameplate capacity in Q2 2026?
Yeah. Look, one thing I will say is, sometimes things take longer than expected. And in the case of Valentine, in its early phases of the ramp up, we've been ahead of schedule. It does not mean that we're going to have other hurdles that come up, that challenges that come up, whether that be in the mill, in the mine, in grade, or other things. Now, I'm not foreshadowing anything. I just think it's important to note that during these big ramp up phases where you've got multi-million, hundreds of millions of dollars have gone into these types of plants and infrastructure that do take time to work out all the kinks. We never know for sure. We're doing everything we can to proactively think about those things. And I think it's a testament to what you just said, the quality of the people that have looked forward at what could come up. But in terms of the milestones that we see, a couple of things. And one is, and you just said it, right, is getting to nameplate capacity. So we're at commercial production. which is about 70–80% of that mill's nameplate capacity. So in the case of Valentine, at least in phase one, the nameplate capacity there is 2.5 million tons of material or rock that will go through that plant a year. We're at about 80% of that right now. We would expect that we should get to that full 100% nameplate capacity by Q2. And another note here is that one thing Darren did in 2024 when looking at the design and the construction is he also identified, the opportunity to maybe push the throughput a little bit beyond the 2.5. So with some additional what we call tankage within that plant, we think there's an opportunity to maybe even push this phase one to 3 million tons. Don't know yet, still early to tell, but that's an opportunity. So that's a milestone that we can look forward to. In addition to that, what is important for investors in this space is, yes, the production, it's yes, the cash flow, but it's also the intrigue of what could be the size of an asset in terms of its annual production or its size of its resource or reserve. So what we're excited about here is the exploration upside. We've already made new discoveries at Valentine. We're drilling there now. I think we've got 5 rigs in operation at Valentine. So I think, some things to look forward to is getting to the nameplate capacity of phase one, maybe pushing beyond that in 2026, but importantly, exploration upside. But in addition to that, we're working on a phase two expansion. Now, in the 2022 technical report, it said that a phase two expansion would take the mine or the mill to 4 million tons a year. And that was expected in the next coming years. We expect to push that and maybe get it to 5 million tons after the phase two construction, which could start as early as 2026. So some things to look forward to in terms of throughput, optimization, and exploration upside of Valentine.
Now, speaking on production, let's get into the size of what's going to be coming out of the Valentine. Valentine is expected to deliver 175,000 to 200,000 ounces in 2026, which is fully owned by the company. That's a massive contribution to our Canadian production base. How should investors think about the impact this has on Equinox scale, cash flow, and overall valuation as we move into the next year?
Yeah, so we didn't provide any guidance for 2025 for Valentine as we were finishing construction and starting the operations and ramping up. It's always difficult through that period. I mean, as I said before, you never know if you run into some hurdles that could delay things. Fortunately, we haven't yet. Fortunately, we haven't at all. So it's been a tremendous new asset for us. In terms of what it looks like for 2026, I mean, I would expect that we're going to be producing somewhere between 150 and 200,000 ounces next year because Q1 will still be doing a part of the ramp up. And clearly that's going to be very positive in a bigger portfolio from a production perspective, right? So next year we'll be guiding production and costs at Valentine. So, you could be expecting somewhere between a 15 and 20% increase in production from 2025. So that's exciting to see from a business, but also an investor perspective. That'll generate some very solid cash flows at current gold prices. Assuming we have a $4,000 gold price next year, a tremendous amount of additional cash flow and EBITDA for the business. And really importantly is the fact that during a period of down cycle gold markets, we've been constructing a Valentine and Greenstone. So we're seeing a shift of our overall portfolio to be more centric around Canada and North America. What that typically means is investors will look at these safer jurisdictions as assets they want to invest in. And you start to see a bit of a lower discount rate on your valuations. And so that's very positive for investors. So exciting to see how this all comes together, but a major inflection point for the company.
I want to move away from Valentine and into Greenstone. In August, the news release also highlighted some key leadership additions at Greenstone, including your new VP of Operations, Brian Wilson, someone with deep commissioning and optimization experience. How has the ramp up progressed under this strengthened team?
Well, you said it really well at the beginning here when we talk about people and how important people are and the value of somebody that has a tremendous amount of experience in ramping up in operations. And again, that's what Brian brings. He was just recently part of the Côté Gold team that was ramping up that asset in Ontario as well. And he's done a tremendous job there. And it's, I believe, reaching nameplate capacity now and hitting all the goals and KPIs that they set forth for them. So having a gentleman like that join our team talks about the quality of people he wants to work with and the quality of opportunity within all of Equinox Gold now. But also, we're very excited about that because I'm sure Brian has other opportunities that he can look at versus a David Schumer that's our chief operating officer or Darren Hall, both of which have experience, but he could lend himself to looking at different things. It's all about the strength of your team, the strength of looking at things from a different perspective, doing everything we can to take waste out of the business and optimize the assets. So looking forward to seeing some of his contributions, and we're already starting to see that. He joined in September, right? And I believe he's brought a couple people to augment the team and additions to the team. But we're seeing mine tons increase. We're seeing good grade reconciliation starting to bump up. We're seeing plant reliability. So a contribution across the board, but nice to see those benefits starting to get realized.
So the mining rates exceeded 185,000 tons per day in Q3 at Greenstone, from what I understand, and the grades have improved meaningfully. What further steps are planned at Greenstone to sustain steady state production levels heading into 2026?
Yeah, and let's take it back a little bit, right? At the beginning of the year at Greenstone, the plan was to do about 180 to 185,000 tons a day, when in fact, with the shovels and trucks, they were doing about 130,000 tons. So 130,000 tons of material movement. So drilling, blasting, hauling that material to the stockpiles or to the primary crusher at the plant. Because of the addition of some people, looking at ways to utilize the equipment, the trucks and the shovels more effectively and efficiently. We've brought in some contractors that are very well known for helping with that. We've started to do some double side loading into the trucks, which allows for quicker transition time. Things that we call hot seating in and out of the trucks, so that your truck isn't sitting there idle, but it's always being used effectively. A lot of these types of small little optimizations are being done such that we can continue that material movement on a daily basis and to that level. And in fact, we'd like to push it beyond that. We would expect that we could do 200 to 220, maybe more, 1,000 tons a day. And that's not adding equipment. That's just utilizing the equipment we have effectively. So it's those types of things, and always looking at ways to improve. With the multitude of operators that we have there now, they're always looking at those types of opportunities, minimizing waste when it comes to the mining practices, so we can maximize grade going to the mill, then maximize throughput time at the mill. Many different things that the team is doing, but those all lead to that increased reliability, increased throughput. When we try to maximize that grade to the mill, that grade is going to help support the cost basis of which we're operating on and going through the mill on a per ounce basis. So yeah, I mean, the team has got that bench strength to be able to realize that full potential.
So it sounds like there's a lot of exciting opportunities at the company. On the exploration side, the Frank Zone results at Valentine were extremely impressive, including wide near-surface intercepts that remain open. Combined with active drilling across Nicaragua, Mesquite, and Los Filos, where are you most excited for potential discoveries or resource expansion into the next year?
That's a good question. I mean, having to prioritize the portfolio. Hard to do, but I guess really we'd have to go with Valentine first. And why I like that is that, for one, a couple of the geologists there already, there's a 5 million ounce total resource base. So that's measured, indicated, and inferred material. And they're very confident that within this geological setting, a big fault that goes through the property that allows for the fluid flows and allows for gold deposits to form, believe that there's another 5 million ounces there. How we find that to be determined, but we are starting to find new gold mineralization outside of the resources that I've stated, as you said, in the Frank zone. This is located, based on the information we've publicly disclosed already, about 1,000 meters from our furthest southern pit. So on the trend, on the fault, and I think when we reported one of the biggest intercepts was 172 meters of 2.4 grams per ton gold. So this is a very analogous style of mineralization to the 3-pit mine plan that we've already defined. And this is an exciting stat for me. 90% of the drilling that has been done since drilling started at Valentine has been centered around those 3 deposits. Probably 10 to 15% of the overall 35-kilometer shear or fault system where the gold mineralization has been hosted has been tested. So you've got a huge amount of potential in front of us there. We're talking about laterally near surface, but also the depth potential as well. We're using some interesting new tools with a company called Verify, using artificial intelligence to support some of the geological work the team's doing. So I'm pretty excited to see what could be yielded out of that. Our director of exploration there, Nick Capps, who's been on the property ever since the discovery back in 2010, is telling me that it is having a real positive benefit from an expediency perspective, and in reviewing all the different levels of data that they've gone out and collected. So pretty keen to see how that could unfold in 2026.
You have some pretty incredible, projects as well as drill sites. I mean, this past year you retired 134 million of debt and sold your Nevada assets for over 100 million. Should investors expect, additional portfolio optimization or asset rationalization as you continue to strengthen the balance sheet?
Yeah. That's a question we get a lot, and rightly so, right? You're always looking at ways to maximize value, and our focus as a leadership team of the business is doing everything we possibly can to contribute to share price performance. I mean, that's what our investors are looking for. Our investors are acquiring shares in the company because they believe the value should be increased over time. Some of that will be contributed to gold price. Some of that will be contributed to how we operate this business. Mm-hmm. And, to your question, we're always looking at the portfolio. Should we divest of something? Should we allocate capital here? So capital allocation strategy is becoming a very important aspect to unlocking value because we're generating a lot of cash. And where are the best and the highest priority opportunities to help drive that share price performance? And it could be that we divest of assets. Maybe there's an asset or two that have been around in this portfolio for a while that could be better in someone else's portfolio versus ours. Again, the company, if you look at the portfolio now, it is transitioning to be more North American centric with Valentine and Greenstone ramping up. And then the growth pipeline with Castle Mountain Phase 2 in California that again could contribute another 200,000 ounces of gold. So we're not in the acquisition mode. We're not in the merger mode. But if the right asset fit better in someone else's portfolio for the right value, right? We're not looking at any sort of we need to sell assets. But if somebody approached us with the right opportunity that was win-win for both, I think we would look at that very closely. And remember, the company does have $1.5 billion of debt with term loans and resource lending packages. So we would like to focus on, we are focusing on deleveraging our balance sheet to put the company in a position that is sustainable in any gold price environment. That's a focus.
And speaking of gold price, it's obviously essential to the business that you operate in. What's your view of the gold market heading into 2026, and how do you see Equinox positioning itself relative to peers if we continue to see strength in the gold price?
Yeah, it's this is a biased question, right? But frankly, I'll try to step out of my bias and look at it objectively. The gold price has really catapulted up
What an incredible story to be production level company at an era when the gold prices are at record highs. It's such a success story that you've been a part of this, company for a long time, Caliber before, and now Equinox. So congratulations on this amazing mining story. I just want to thank you so much for taking time to sit with me today. And it's clearly a lot happening across the portfolio and a lot investors can be watching ahead into 2026.
Yeah, no, I appreciate that. And it's, obviously it's a lot of work and, we got some luck on our side sometimes with the right commodity or right currency at the right time. And, but there will be stumbling blocks. Things will come up. And what I like to say is we have a good team that is always looking at solutions rather than focusing on the problem. So I think that we'll find a way through it and it'll strengthen the business and, very likely strengthen the overall opportunity for shareholders.
Thank you so much.
Thank you.
For everyone tuning in, you can follow Equinox Gold on the TSX and NYSE under the symbol EQX. With both Valentine and Greenstone ramping up, record production and exploration continuing across multiple jurisdictions, this is a company entering a major growth phase. If you enjoyed this conversation, don't forget to like this video, subscribe, and follow us for more interviews with leading miners, commodities, and global markets experts. Thank you so much for watching MidDay Bell, and we'll see you in the next episode.